Hi guys, Adrian here, and today I'm going to discuss sterling volatility ahead. Now, I can expect that the British pound will become more volatile with larger price swings as we lead up to a potential Brexit no confidence vote. On Tuesday, September 3rd, the UK Parliament will return from its summer recess and MPs will straight away get to debate and vote on a motion of no confidence in UK Prime Minister Boris Johnson. The 2 weeks that follow this vote are expected to send sterling volatility much higher. On 31st October, the UK is set to leave the European Union with or without a deal. Boris Johnson has repeated this throughout his short tenure as Prime Minister and is opposed by a bloc of Conservative MPs who want a no-deal exit taken off the table. Opposition and Labour leader Jeremy Corbyn will in all likelihood call for a vote of no confidence in the Prime Minister immediately when the UK Parliament reopens after its summer recess. Should Corbyn be successful and win the vote, the next 2 weeks will see much by way of political positioning and infighting and heightened sterling volatility. Should Johnson lose the confidence of the House, he could set the timetable for a general election with October 25th as the first possible date, though it is expected that he will only do so for after October 31st. Sterling will swing sharply between September 3rd and September 7th, during which time the market will try to price in all the alternatives on the table. Currently, the pound is weak, while the Brexit clock ticks down, and speculative investors are positioning heavily short of sterling against other currencies. And you can see on this image of a pound USD weekly chart how the market has been moving down. The price has been moving in a downward trend for a few months now. Any positive news that removes the no-deal exit option will send the pound sharply higher. Recent talks between Johnson and German Chancellor Angela Merkel and French President Emmanuel Macron have also added to increased volatility expected over the coming month. Merkel and Macron have challenged the UK to find an alternative to the Irish backstop in the next 30 days to avoid a no-deal Brexit. Johnson promised to step up efforts to find an acceptable solution for a new Irish border backstop. Other factors include UK political party conferences set between September and October and an important EU Council meeting scheduled for October 17th through 18th, the latter being the last meeting before the Brexit deadline and seen as a last chance to avert a no-deal Brexit. With all the above in mind and with many scenarios possibly playing out, all of which are hard to predict, expect that sterling will be in for an extremely rough ride through October 31st and beyond. To learn more about trading, please visit us at www.forexduality.com.